Hello, welcome to the weekly technical analysis review for Monday, November the 19th. I'm Rafi Boyajian, currency analyst at xm.com. The pairs we're going to be looking at for this week are the dollar yen, the pound yen, and the Aussie dollar. We're going to start first with dollar yen. We can see that the near-term bias for the pair is rather bearish at the moment. We can see the stochastics are declining. The percentage K line is just about to enter oversold territory. And so there's clearly more downside pressure following Friday's big losses. Price action is currently just below the 50-day moving average. We saw on Friday the pair slipping below the 50% Fibonacci retracement of the downleg from 114.54 to 111.37. If you do see further declines and a drop below the 38.2% Fibonacci at 112.58, we could then see the focus shifting to the downside, and then the 112.12 level, which is a 23.6% Fibonacci, coming into focus, and then below that the 6-week low of 111.37 all the way from back in October, and then a drop below that October low would risk shifting the bullish outlook in the medium term to a more neutral one, and possibly the start of a new bearish outlook. However, if we do see a recovery, initial resistance should come at the 50% Fibonacci at 112.95. Above that, we have the 61.8% Fibonacci at 113.33, and then further gains we could see the pair rising all the way up to the 114 handle. We've seen a strong resistance area around 114.10, with 114.20 being the November peak, and then above that, if the pair is able to re-challenge that 11-month high of 114.54 from back in September, we could see the bullish outlook being reinforced. Let's now move on to the pound yen pair. We can see we're getting mixed signals from the technical indicators. The RSI has flatlined just below the 50 neutral levels. The stochastics, though, are still falling and entering oversold territory. At the moment, there is strong support coming from the 50% Fibonacci retracement of the uplift from 139.82 to 88 to 149.70. So if you were to see a breach of that 50% Fibonacci and then a drop below that long-term downtrend, then the risks would to the downside would increase dramatically, and we could see the pair first challenging the 61.8% Fibonacci at 143.64, and then the 7-week low of 142.76 from back in October, and then further down, if the pair does drop further, we would see prices heading towards that 1-year low of 139.88 from August, and a return to the long-term bearish outlook, which has been in place since February of this year. To the upside, though, if we do see a bit of a rebound, especially if, as the stochastics point, it could soon be reaching oversold territory, we could see an initial rebound to 38.2% Fibonacci at 145.95, and then we've got a key resistance region around the 147 level, which is where the 50 and 200-day moving averages are converging. If pound yen does manage to bounce above those moving averages, we could then see the focus shifting to the upside. We've got further resistance at 147.39 at the 23.6% Fibonacci, but clearing that region, we could see pound yen being in a better position to resume the August to September uptrend, when we saw prices picking at 4 months high of 149.70. In the medium term, though, the outlook is still fairly neutral. Looking finally at the Aussie dollar pair, we saw a strong rally last week. RSI approached the 70 overbought level, though it's now come down a little bit. We're seeing some easing of that upside pressure. If we do see a further downside correction, initial support should come at the 23.6% Fibonacci retracement of that long-term downtrend from 0.8135 to 0.7020. A drop below that, then we've got an important support area around 0.7250, which is where the 100-day moving average currently stands and is top of the Ichimoku cloud. So further declines would take price action below the Ichimoku cloud, and it's worth noting that price action rose above the Ichimoku cloud this month for the first time since all the way back in February at the start of the year. And then further declines, we could then see 0.7170 coming into focus, where the 50-day moving average is. A drop below the 50-day moving average would shift the near-term bias back to bearish one, and then we could then see prices heading back towards that 33-month low of 0.7020, with key support just above that at 0.7040. However, if prices are able to resume the uptrend, the next resistance rather should come at 0.7360. That's been a congested area several times in the past. Clearing that way, we could then see prices climbing all the way up towards the 38.2% Fibonacci at 0.7446. That's also just above the 200-day moving average, and then above that, we could then get signals of the start of a new bullish phase. At the moment, though, the medium-term outlook is starting to look a bit more neutral, and we're seeing an easing of that negative pressure. That's it from me. Thank you very much for watching, and have a great day.